Okay, you should be able to hear me now. Let's see. Can you hear me? Okay, you should be able to hear me now. Let's see. I know that there's a huge delay because I just heard my voice come through like 10 seconds after I said what I said. So that's not great. But we'll go with it for now and see what we can do as I'm still learning. Let's see if I can put my camera on as well. Just a second. Nope, I don't see my face there. Can you see me or just the chart and hear me? Okay. Yeah, there's a huge lag. You answered like 10, 12 seconds later, but we'll go with that for now. I'll just share what I'm looking at. So let's get rid of this. And let's do this. Okay, so this is what I am. I'll keep one eye on comments just in case you have any questions or comments. And this is what I am looking at today. So I'm going to be trading, if opportunity presents itself, 6A and YM. So 6A is going to be a short, and that's what I had a short in mind, which was right here at 0.7559, and I was looking for more confirmation and it's gone without me, and that's the second time since last night that I've waited for a deeper pullback for 6A and not caught anything. I was looking for short here, and now again short here. But if it comes back and it has the right look in terms of time and sales, the footprint, so I'll bring that over to this chart so you can see. As I mentioned in a recent video, I'm looking at the these are unfiltered trades coming through, executions. So you have a 1 lot, 2 lot, 3 lot. And obviously if it's blue, then they've lifted the ask or the offer. And if it's green, let me just check that and make sure that I'm not saying something. No, sorry, that's the other way around. If it's green, they've lifted the offer. And if it's blue, they've hit the bid. So you can see the bid side, the buy side is blue. And then the sell side, those who are offering on the ask or the offer, which is green. So if you see green over here, I mean, this might be obvious to you. I don't know what level you're at now, but the green side is people moving towards the ask. So buyers on the green side and sellers moving toward hitting the bid on the blue side. So blue downside pressure, green upside pressure. This, it has the same thing except it's filtered for 5 lot executions and higher. So you'll notice there are no numbers here that are lower than 5. And then here these are filtered for 10 and higher. and that's what I'm looking at to base my decisions off of in conjunction with the chart. So here at this, we're in Central European time here, so that's 5 o'clock. If we go back, I don't know if it goes as far back as 5. Let's see. It just goes back as far as 5 o'clock. You can see that at 59, we had loads at 59, 58, and 60. So at this high here, we had loads of buying pressure, but they couldn't go any higher than that. And so that was the premise for that short. But I was just looking for it to come 2 ticks higher, and then I would have shorted at 61. But that's gone without me so far. I'll still do that if it comes back. So that's 6A. And YM is over here. And YM, I was looking for a long here. I was up at nearly 1 o'clock in the morning because I've seen this big gap open. Unfortunately, I took a little revenge trade on Friday. I don't know if you've checked out Friday's video, but I did edit the post in the comments section, edit the video. And as you can see here by my execution arrows, you will notice that I got long at 497 and I got stopped at 487, which is the low before the gap up. Now, obviously, that was just a stupid trade because it was before 10 o'clock and there wasn't, you know, enough time because Top Step Trader, the rules state that you have to be out by 10 past 10. This is Central European time, so 10 past 10 is 10 past 4, I believe, Eastern time. We're 6 hours ahead. So in any case, it was 10 minutes before market close and you had to get out. So this was a bit of a revenge trade because I had missed other opportunities earlier in the day. So that was that. And if I was up at 5 in the morning, I would have gone long down here. That's what I was looking for in the 30s, 630s, and hold back to the pivot high. But of course, I was in bed at that time. And now the next thing I'm looking at is the long from, let's see, I'll bring over the 30-minute chart. It's not fast-paced, my trading. This is why I've never done a live stream, really, because there's not a lot to do. Like, it's not, you're not firing off trades every 5 minutes or even every hour, quite frankly. But what I'll be looking for is down here at 56, this 5% away from the golden mean retracement. That's what I'm looking for. I'll become interested in this chart at 56. I know it's got a lot of support here via these 30-minute candlestick wicks lows here, but I'll be looking for a second leg and then get long at 56. So, and that's it really. There's not a lot to say other than that. I can analyze, just a second, I can analyze the other charts that I do look at, but I've boycotted for the time being because my hit rate has just dropped on those. So the 4 instruments I look at, you can see here 6A, 6B, 6C, and YM. So now I'm limiting myself to 6A and YM because that's where I've been getting recent success, and so it makes sense to go with what you're winning on. So, and then you got 6B and 6C, which 6B has been horrendously bad for me. Good calls, but bad entries, so I need to work on that. 6B, looking at the 30-minute chart, if we go over to the 30-minute here, you can see that, let me bring up the drawing tool. You can see that obviously this is a very obvious range here. So it would make sense in standard technical analysis, it would make sense to just go long off of this lower here. But, and this is a significant but, if I were going to trade this, I would be trading it short, and here's why. Let me just zoom in here. Using the technical analysis that I learned all those years ago, 10 years ago when I went to Florida to study with a trader named, if you're interested in checking her out, her name is Tony Hansen. And the biggest takeaway I got from her was that of pace. So let me show you what I mean by pace. You have to dissect the moves. So the impulse moves and the corrective moves. So obviously impulse moves are big, a stronger move. So less overlap, bigger bars, and just the primary direction. So obviously this would be an impulse move up here like this. And it isn't a hard and fast science, it's a bit artistic. And then you have to transect, that's the word I'm looking for, transect the waves of price action and look at things in terms of bulls and bears. So here the pace is relative to this is slower than the bears are pulling back, are in control to a lesser degree than the bulls. And then you go ahead and you transect, if I can get the word out, transect every wave. And so this is where you have to just choose a way that you do it. So obviously this, we can either stop here and do a new wave, or we can just go down here. And then you go like this, like this. The bulls gave a last attempt, and this usually happens before we get a breakdown. You get a last desperate attempt by whichever side is trying to win, and then they give up. Kind of like the tug of war, you know, when someone, or in the movies, when someone's being, it's not a very nice example, but when someone's being choked or whatever, they fight one last time and then they give up. Well, that's the pop here. So if I were going to trade this, and I won't, I'll sit on my hands just because of my hit rate's terrible. I'd be looking for downside. So you see here, you see, let me get this pen. You see, so this would be bulls. I guess it makes no sense to put B because B is for bulls and bears, but we'll just say, we'll just do this. Bulls, bears. Now, relative to the last impulse move, the bulls are weaker because this pace is slower compared to this pace here. And then if I were to bring this over, let's see if I can do that. This, well, the way I've transacted it there, they're a bit strong, a bit less weak. The bulls are gaining some traction here, but then the bears, sorry, and then the bulls here are still rolling over. So that's what you're looking for, the rolling over of price action. If I move this line over here, it's shallower. If I move this impulse wave over here, it's shallower still. Then you see the bears really pick up to the downside here compared to prior bearish price action. The bulls, as I said, made one last attempt to break these highs, came back down as hard as they went up. And so even though we're on support, I'd be looking for a reason to play this short and then look for, you know, measured move targets or whatever your plan calls for. So some people would do this, and then they will extend this down, like say look for 100% move down, or 50% move down, or a fib projection, something that you can repeat over and over again. But the long and the short of it, no pun intended, is that we're expecting downside here. So that's what I would look for on this chart. So now moving over to the, oops, got rid of all my study on there, but that doesn't matter because I'm not going to be trading that. Where did I have that? Let me draw it back on because I will use it when I return to the charts again. So just a second. Got to zoom in so you can see, you'll get an idea of my method as I do these little bits and pieces. So I'm going to anchor from that low there. It says retracement, but it's an extension. 86 all the way up to 18. So that was 386 to 618. And that should be, let me just zoom in because it's a bit too far away. Okay, and that should be what we were looking at before, yeah. So that's the support level that we had before. Can you show a daily weekly chart? This can try its most consolidation. Yeah, sure. Not that my moves are too small, but just for the entertainment purposes, we can look at a daily. But I wouldn't be trading the daily. Daily move, days to load. That's strange. Because this is a futures contract, so we can't really go back further than the contract wasn't trading back here. So, but even on the daily, straight up, we can see that using basic technical analysis, we've broken out strongly and gapped out of this pennant. So that gives you even more reason to want to go long. But you've got to be really careful about, if I'm an intraday scalper, I really don't need to be looking at the daily. And my sort of pippage that I'm looking for, I'm using a 10 pip stop and I'm looking for 30 pips, 40 pips, 50 pips. So I don't personally need to lean on the daily, but the daily is up anyway. I mean, anyway, that goes against my bias to the downside. But short, intermediate, long term on the daily is up. Short term on this time frame, I would be looking for at least 30 pips to the downside. You can squeeze out of that, if not 50 and beyond. So enough for a 10 tick stop to get a multiple reward to risk ratio. So that's the 30-minute, and then you just drop down to the 5-minute and look for areas to get in. So if I were going to play this, and I repeat, I'm not going to, I would just simply look for a reversal candlestick that also combines with time and sales to make a compelling reason to go short. So if I see buyers come in up here, but they can't break the high, or buyers come in at a wick, just a second. If I were to see something like this, this is how I would go short. I would look for buyers to come in. Say you got like a 20 lot here, and then some traders lifted the offer at whatever that is, 2.8, let's just call it 17, and then that turned into a big, obviously not that big, it's not to scale, but that turned into a big wick. Then that tells me that all those buyers are trapped here, and then I would look for the reaction as it triggers the candle. And if I see lots of selling under this candle, then that tells me that they've got to liquidate, and that's how you would get in at a good place to ride any move that might be ensuing. So that's it really. I guess we can hang around. I can mute the mic and hang around. You'll see any trade that I take, but that's all I'm looking for. Is up here, and I'll explain a little bit why. The dynamics of this 6A trade. So if it should go back up there, then you will know why I'm going to take that one. So the reasoning here is, let me just watch YM. The reasoning behind this, this is my own technical analysis that I've developed over the years. There's a pattern I have called the appendix, and this is the appendix here. It's just a glorified pipe bottom. If you look up pipe bottom, it's very similar to that. Or, you know, you could call it head and shoulders as well, but it's got some unique characteristics to it. You had rejection here, wick there, and then you had a gap here. The bars opened out. So before, where the bars were overlapping a lot, they opened out here. It did its thing up here, which would be the head, if you want to call it head and shoulders. Came back in and then returned to the same price action that it had before. So if we divide it into pieces like this, you can see that the overlap is less here and the bars are bigger. And here there's a lot more back and forth, and here there's a lot more back and forth. And so that's what I call an appendix. And appendices indicate trapped participants. So here there was a lot of indecision, and then there was a lot of buying pressure here. So a lot of people got caught long here, and then when it came back in and wicked against them, they've now got to liquidate as price moves down. So that's the idea behind that. But that on its own is fine, but what really attracted me to this is over here. I believe this close here is that there was like 120, there was 120 lot buy order there. So this is what had me looking to short here and short here last night, because if you think about it, if you were long with 120 contracts and you saw this happen, and you didn't, for whatever reason, you didn't have a stop, what would you want to be doing up here if you saw wicks against your entry? You'd want to be liquidating that buy. And so as soon as you see that shooting star, you're going to lighten your position by selling some of your buy here, and that's what drove the price down here. And drove the price down here. Now we broke up, and if you notice the break above, the break here from chop to knot, it coincides roughly with that 120 lot order. So now those people who, if they didn't liquidate their 120 lot order for whatever reason, their stop was say under here, or they had some of it left, now they're going to add back on, or they're going to feel happy that it's going up here. And then when it came back under and formed what I call the appendix, now they're going to need to liquidate again. So that's why I'm looking to get short anywhere here against those trapped buyers. That's the idea behind that. And that's it really. It's quite boring. It's not fast paced, because I've found that fast pace doesn't work. I haven't taken a trade yet, you know, and my day is coming to an end maybe in 2 hours. I won't be looking at charts anymore. I'll come and go and just have alarms ready to alert me, alerts to you know, bring me back to the charts if and when it gets up here. But that's it really. So I think I will maybe, if there's interest, there's like hardly anyone watching really, so probably close this one down, and at least this is here for posterity to see what my plan was and so on and so forth. But it looks like there may not even be any trades. This is where it's very tempting to switch over to the pairs, that the instruments that you said you wouldn't trade, such as 6B or 6C. That's the last thing that we didn't have a look at. Let's analyze 6C. So 6C is like this, and I don't know what this is here. let's get the right number of days because we don't have enough. I always look at 32 days of, or thereabouts, of half-hour data. And you'll see my bracket there. That's all I'm doing, is the golden mean. And let's see what this is doing. So we had a chop to knot here at the prior pivot low. So lots of cells came in here. That became resistance. Went lower, slowed in pace here as if it was going to continue the downtrend, and then popped up. It's popped up here, but it's come down just as hard. So I would be looking for short. And the area of short, the area that I would be looking for to short would be, let's put this down here. That's why I have those dots on there, so that I can anchor at the precise price point that I'm looking for. Let's see, that is, won't show, 99. So I'm looking for 99. That's close enough. And then I go all the way up here to this one. And that means that, as you can see, that lines very nicely. If I was there at 1 o'clock, then that would have been a good trade to take if your bias was down. The next thing you can do is look at the projection here from this to this, and we're hitting support there. And yeah, so there's not a lot going on here. The only thing you could do here is look for a long, fade the move back up for it to roll over from here. So I would expect, as it's creating an appendix here, I would expect it to bounce up to 43, what's that? 431, and we're at 402.5 now. So somewhere up here. So this would be a dead cat bounce play off of this 405, 404.5 area. That's the only thing that there would be to do there. So let's make sure that's right. 405 and 385. Yeah, that's close enough. So now let's drop down to the 5-minute to see, and the volume's good as well, because on the 30-minute, because this is how I look at volume. It's going up, but there's a tree here, which is a volume spike that's like 150 to 200% bigger than the prior 5 bars. And now it's tapering off, so that's showing exhaustion down there. So you're almost certainly guaranteed some kind of bounce off of there. So now let's go over to the 5-minute and see what's going on here. Again, I don't have the time and sales up for this, so I can't really get a hold on what's going on in terms of the footprint here. So I wouldn't personally trade it. So that's it really. I'm just going to play a waiting game and see what happens. I know it's not very exciting for live streaming, and that's why I avoid live streaming, because the actual trading process is quite slow and boring. Like, maybe I could come on if and when I get a position, and that's why it's better just to record the live videos really. So yeah, that's it. I'm going to mute the mic for now, and I'll just leave it running for a little bit more, just in case anyone's interested. And I'm very may well, you know, bend the rule and try and get a trade in 6C or 6B, but really I should be avoiding those markets. But you know, if I can get a few pips and then call it a day, then that's something I may do, because I'm back at equity high, so I can afford to be a little bit more aggressive. But I certainly won't be trading 6C and 6B often, if at all, during this week. So I'm going to go off the mic now, and I will catch you when I catch you in the next video.